Welcome back to Chartbusters. Continuing with our corporate conversations, then India Ratings recently upgraded J&K Bank's long-term issuer ratings, and to discuss the impact this could have on the bank and to understand the outlook on the business going ahead, we are being joined by Baldev Prakash, the Managing Director and CEO at J&K Bank. Mr. Prakash, good morning. Thank you so much for joining in. I'd like to start off first by asking you, sir, about this conundrum about that banks are facing with regards to the deposit growth. How has business been in this quarter so far? We are 2 months into quarter two. How has business looked like when it comes to the loan growth as well as the deposits?
Yeah, good morning, Mangalam. So as far as deposit is concerned, first quarter was a little challenge for us, but after 30th of June or 1st of July, we are seeing some deposit accretion, and we have to make little more efforts, which we have already started. Advances growth is in line with our guidance, and we are confident to meet the guidance.
Okay, all right. Hi, Mr. Prakash. This is Nigel on this side. So what would that guidance be? I recall earlier you were guiding for NIMs in that vicinity of around 3.75 to around 4%. What's the outlook on NIMs, loan growth? Let's get these numbers out of the way.
So, Nigel, our story on NIM is intact, actually. 3.75 to 3.85 we have guided. And first quarter, we ended at 3.86. And obviously, given the strength in our CASA, as well as the retail business, which is picking up in our core territory, we are confident to maintain the NIM within our guidance.
Okay. And what about loan growth? I missed that number.
Loan growth overall, mid-teens, we have guided around 15%. And first quarter has been little slower, but this quarter it has picked up, and we will be meeting the guidance.
Any pain that you are seeing in the retail, the unsecured retail side of things, Mr. Prakash, when it comes to your bank?
No, Mangalam, so far so good. And in fact, the retail story is opening up in our core territory, J&K and Ladakh. And this is mainly driven by the ecosystem of tourism. So retail, we don't have much problems. Even agriculture is also picking up good here.
Okay, all right. Mr. Prakash, that's Hormaz, and this is Nigel here. So, I just thought I'll get that out of the way. Hormaz is stepping in today for the show. Mr. Prakash, give us a few more details. As a percentage of your total mix, how much is unsecured of your book?
So, unsecured will be around 25%.
Okay, and you're saying there are no signs of stress as of now, according to you?
No signs of stress as of now.
All right. Now, what is your current restructured book and how much of it do you think can slip?
So, Nigel, our restructured book is around 1,000 crore left now. And you must be seeing it for the last 1 year and so. There's hardly any further slippages out of the restructured book. Whatever is being upgraded, that is being reduced from the restructured book. So, whatever was stressed already slipped. No further slippages are expected out of the restructured book now.
What about overall slippages, Mr. Prakash? What's your outlook on that for FY25, the overall slippages, the credit cost, as well as the asset quality picture going into FY25, particularly because you mentioned that you are currently not seeing any stress in your business whatsoever?
So first quarter, if you have seen our overall slippages, hardly any slippages actually. We have been able to control it very effectively. And going forward also, our credit cost has been very benign, below, in the minus only. And given the type of portfolio we have in the form of already technical written off accounts, so we are expecting good amount of recovery. Because of that, our credit cost is likely to be benign only going forward.
All right, Mr. Prakash, in the region that you operate in the valley, what is your market share, and are you growing faster than the peers, or do you think competition is getting intensive out there? And also, there are some fresh bouts of terrorism. Is it impacting the business?
So, Nigel, our market share has been in the overall business in above 60%. And for the last few years, we have been able to maintain it, though some competition is being faced in the liabilities front, in the liability side. So which we have to tackle it more effectively. And the recent terrorist incidents have happened mainly in the Jammu division area, basically Riyasi and Doda side. So there, though our branches are there, but we don't find much impact on the business of these incidents.
Mr. Prakash, have you received any recommendation from the Reserve Bank of India to bring down the stake of the state of Jammu and Kashmir in the bank?
We have not received any recommendations from Reserve Bank of India. And as soon as we get it, obviously we have to discuss with our majority shareholder, the government of J&K, and we will let you know whatever outcome is there.
Okay, all right. So as of now, you've not received that directive, but that could possibly come. Maybe that's what the street is speculating on. We'll touch base with you at that point of time. Final question before we let you go. Give us a number, right? The gross NPAs, net NPAs, and credit cost. I recall, you were guiding for lower numbers going ahead. So just fill us in with all those three.
So our guidance for gross NPA has been 3.5%. We are already at 3.90 now. And definitely by the year end, we will be 3.5 below, even better than that. And as far as credit cost is concerned, we have already advised in our investor call also that credit cost, because of the technical right of recoveries, right backs, we are expecting it to be benign for the whole year.
All right, Mr. Prakash, thanks a lot for joining in, sharing with us your views on the road ahead for the bank for FY25. That was the management of J&K Bank. The stock currently trading below the flat line, around 0.5% lower at around 110. Time to shift focus then.